Hey, what's good, YouTube? Welcome back to the Brown Gen and welcome to a fantastic Friday where we talk about stocks, talk about everything going on in the market, and also cover your favorite stocks like Zomedica, Nano Dimensions, and maybe Tesla based on what's going on and also what you guys want. As a reminder, this is a pilot, so I'm hoping to see this pick up some sort of steam like my DeFi Kingdoms live streams. If it doesn't, I won't do that for very long. So help me out. Make sure you hit the like button so it pushes this video out. Also, if you're new here, hit subscribe so you keep seeing more of this channel's content. So today and this morning, we'll start with probably one of the best resources that you can have if you're invested in the stock market. So I typically will read the Wall Street Journal every morning before I start work. It gives you a really good idea of what's going on in the markets and sort of helps you understand, hey, like here are the things that I want to be ready for. So I'm not saying to just jump out there and get a subscription to Wall Street Journal because it is somewhat expensive. But if you do find it on discount, so sometimes next to bigger holidays, they offer like maybe $2 to $3 a month. How can you go wrong with that, right? So that's what I picked it up, and maybe we'll go through the Wall Street Journal, and see sort of how the markets are shaping up, at least in the pre-market. Now, there's no surprise here. You can see all of our futures are pretty much red. The Dow Jones, the S&P 500, the Nasdaq, even over in China with the Shanghai market. VIX is up, which is our measure of volatility. Gold is down. Bitcoin is, I mean, it's like zero, but it's green. So it's like 0.001 maybe, 0.001 maybe. So it's sort of flat. So not a very good and not a very motivating market to wake up to. But on this channel, we talk about making money when the stocks go up and when the stocks go down, and we'll sort of cover that later on. But let's first talk about what's going on, and then we'll shift over to specific stocks like Zomedica, Apple, Disney, Nano Dimensions, Tesla, Bionanogenomics, because over there we're going to talk about like where I'm going to be buying, where I'm going to be selling. And I'm going to show you sort of my method to my madness. So if we click here, it says stock futures fall ahead of key inflation data, right? So what typically happens, and it says, it gives us a summary that, we can see with our eyes, right? Index futures are ticking down, suggesting stocks could struggle to hold on to Thursday's modest gains. On the macro front, inflation data is due at 8:30 a.m. Eastern, so in 27 minutes from now. This is the personal consumption expenditures, or the PCE index. You know what? What I typically do is I'll click on this, and I'll sort of see like what it's going on in the week ahead, right? So this is a really great service they provide. By opening this up, you can sort of see like what's expected on each day. So Monday was obviously a holiday, President's Day in the US. Family Day in most provinces here in Canada. Tuesday, and this is this week. S&P Global releases February business activity surveys from around the world, and the National Association of Realtors reports the sales of previously owned homes in January. Existing home sales fell almost 18% in 2022, which was the worst year for sales activity in about 8 years. On Wednesday, we got the minutes from the Jan 31st Feb 1 Fed meeting. These minutes are typically very potent, and the reason for that is inflation data is always a good proxy. Like when we get the CPI print, we sort of get an idea of, okay, well, inflation is doing good, worse, better, whatever. And we make assumptions on how the Fed is going to act, right? In these meetings, we sort of get an idea of what the Fed actually thinks and what they're going to do. So in this meeting, I believe they announced to increase the interest rate by 50 basis points instead of, or maybe to raise short-term interest rates by 0.25 percentage points, so 25 basis points, right? So the minutes sort of give that detail. But by listening in on the meeting, and I think there were a few that voted for 50 basis point hike, you get a better idea of where they stand so that you're not surprised when they raise interest rates even higher, right? I think This is a very good proxy. And once again, while it's important to know what's going on with companies and it's important to sort of understand technical analysis at a basic level at least, if you don't understand what's going on in the market, you may be fighting a trend that is hard to beat, right? Like if all stocks are going down, it's hard to be buying stocks and make it go up, no matter what's going on in the company. Now, of course, there are very few exceptions, acquisitions, superb earnings, but even there, they're muted compared to how much they would be in the absence of a reversal trend. So then yesterday, the Labor Department reported the number of worker filings for unemployment benefits. The Commerce Department released its second estimate of output by the US economy in the fourth quarter, and the economy grew at a solid 2.9% annual rate last quarter, capping a year of slower economic growth when compared with the previous year. And when we look over at Japan, the Stats Bureau of Japan raised annual inflation data through January. Core consumer prices in Japan rose 4% in December from a year earlier, the fastest pace since December 1981. Now, this morning, the Commerce Department will release figures on the US household spending and income from January. Consumer spending fell 0.2% in December from the previous month, the second consecutive monthly drop. More recently, U.S. retail sales, which capture part of consumer spending, jumped 3% in January. So basically, what we're saying here is people are spending more and more money. And, you know, if that's the case, what incentive do companies have to reduce their prices? Companies typically reduce their prices when people aren't buying, right? And it's also hard because that means there's a lot more money out there, right? They need to sort of rein that in. The department also releases its personal consumption expenditures price index, a gauge of inflation closely watched by the Fed. The PCE price index rose 5% in December from a year earlier, down from the 5.5% rise in November. So at 8:30, like 23 minutes from now, we'll sort of get that information. Let's just look at the sticks. So I think this is the other like really useful tool that I use, and I talked about this last week. You want to look at the Nasdaq and the S&P 500 and sort of see how they're doing, right? So QQQ is the Nasdaq, and you can see here near the end of 2022 or the start of 23, we sort of were near the bottom, right? So like I mentioned this last time, but stocks, they don't just go down. They go up, they go down, they go up, they go down, and they go down more than they go up. So overall, you'll see a zigzag pattern always with stocks where the stock will go down, it'll trend down over time, but it's not just a straight line, right? And that typically happens in the absence of a huge threat. So like if somebody said, hey, the company's going bankrupt, of course the stock's going to go straight down, but then it usually has a little bounce and then it goes back down again. So the Nasdaq was doing phenomenal in 2021. 2022 was a different story, right? We saw it came down, and so this is March, so you can't see the Jan data, but you know what? Let me go to the advanced chart here, and I'll show you what I mean. If I zoom out, it's been a while since I've seen it, but you should be seeing over here, December, where we peaked at 408. I'm just I like seeing the sticks when they're bigger, so maybe I'll hide this. So if we zoom like this, we sort of peaked at 408 in November, came back to 404 in December. It went down to 334, back to 371 in March, which is what you saw. And then from 371, it dropped 100 points straight to 270 basically, jumped back to 335 in the fall. Then in October, we hit our newest low at 254. And since then, we've sort of kind of bounced to 296, back to 260, now to 313. And we're starting to see it sort of go back down, right? Now, that's not to be unexpected, and it's potentially, I think, we may either stop at like 270 and bounce up, or we may break that ceiling and go down further. It really depends on the macro environment. In this short period of time, I'm avoiding index funds or funds that track the indexes like Nasdaq or S&P 500 like the plague. They're typically seen as like the safety place to invest, but in a period of time like this, there's always a mix of companies that are like really bad with really good companies, and the really bad companies will bring the really good companies down when they're put together in a basket like the Nasdaq, the S&P 500, the Dow Jones. So what we should be looking at are companies that are profitable, companies that have a lot of cash, and those companies typically never go on sale except for in this period of time. And this is really why I believe that this is an unprecedented time where, let's just say, you can create generational wealth, or you can buy stocks at a massive discount, and 5-10 years from now people will call you lucky, right? I think that is sort of what we always aim to do here, is make the moves now so that people later can just call you lucky and sort of wonder how you got such a great deal. Even though the Nasdaq is 313, which is about 25% below all-time highs, it's going to take like maybe a couple years to sustainably get back to this, I think, in my opinion, right? None of this is financial advice, of course. I always have to say that. Do sort of what you want to do. I'm here to sort of document my journey for those who are interested. But I'm completely staying away from these because, as I mentioned, they're sort of tied in with those other companies. So that's the Nasdaq. And if we look at the SPY is very, very similar, right? So the SPY, if we go back, and the SPY is heavily tech, right? If we go back to the SPY, once again, we peaked sometime in November, December, came down to 4,100, bounced up to 4,600, dropped 1,000 points to 36. Then, so from the summer, we had a rally, like a mini rally, went to 4,300. Then in October, right, went to 3,500. And then we've sort of risen up to 4,200. But if you look at the peaks, 48, 46, 43, 42, it's going down, right? It's a clear downtrend, right? The question here is, are we going to see it sort of bounce early at like the 3750, 36,760 range? Or is it going to break through these floors and come back down even more? We can't tell. It all depends on the economic and the macro environment. A lot of this is pushed by heavy institutions who are buying and selling certain stocks. And a lot of times they use the news as an excuse to sort of get these prices down there, right? But like I said, I'm not focusing on these. I'm focusing on a select few stocks, and I'm going to cover those stocks. Some of them are mixed. So like there'll be the stocks that you've known to like come and love, right? Like Zomedica, Nano Dimensions. And then there's stocks like Tesla, Apple, Disney, ChargePoint that we'll talk about too. So let's see what's going on. Hey, Trade Room. Good morning. How's it going? Been tapping into a lot of your crypto lives, but it's nice to jump into your stock input as well. Thanks to the consistent content. Yeah, thank you for coming. Like I said, the more people who show up and the more people who want to listen, the more useful this becomes, because I also want this to be a forum where if you have a certain stock that you want to look into, we can do it together on the channel. Because I used to get a ton of comments on my YouTube videos when I used to create YouTube videos instead of doing live streams. And people would say, hey, that's great, but can you cover stock X? And then not knowing that, like, if for me to go in and go through the entire production, it takes a long time. Whereas if we're doing it here, I mean, literally, I woke up like at 7:30. I turn on the camera and we're ready to go because I set this up the night before with all the tabs I wanted to open. By doing that, we can literally just cover whatever stocks people want to talk about. If there's an update you want on Zomedica, Nano Dimensions, Bionanogenomics, whatever, we can talk about it, right? This is sort of the perfect forum to do that. I think it's better than just waiting in the Discord and sort of answering reactively, because other people get to see it as well who are not in the Discord. So that's sort of what the function of this is. But like I said, if I don't see much traction on this, this is an hour that like is brutal on Friday. I would love to get up at 8:30 instead of 7:30 Eastern and that way, like, I get 1 more hour of sleep before work. So it really depends on how much people like and appreciate this, right? PCE coming, if anything, out last leg before we move up. Let's hope so. I really, really hope so. Good morning, Sporco. How's it going? Thanks for making it here. So before we, you know what? Let's just go to Apple. So let's go to Apple. Apple is probably one of the safest companies that you can buy. And it is probably one of the best companies in the world because they sit on a ton of cash, ton of cash. If Apple goes down a ton, we got bigger problems for this world, right? I think you guys know I'm a huge Apple advocate. I even buy their products like the Apple Pencil with no use for it. So like literally, I'm one of those Apple fanatics, you know. But when we look at Apple, and you know what? Before we even do that, Trade Room. I'm a big fan of Enphase and ET. What's ET? I gotta look that up. I have a ton of Enphase in my portfolio as well, so I'm a huge fan of it. I did take profits around $300, and I started buying back in around 220. So, you know, like I do love Enphase long term, but I was definitely cashing in on those profits when I thought it was a little overextended euphorically, maybe 2 months ago or 3 months ago. So looking again at Apple, if we kind of go back, let's look over here. I believe it peaked at $180. Yeah, so $180 back, and should be no surprise. A lot of these tech stocks peaked where you see the S&P 500 peak, right? But Apple is a stock that sort of, while it hasn't come back all the way to 182, it's come to like 176, 179, 176. And how many times does Apple have to go to 132, 129, 124 before people realize, hey, this is a good buy? Now, I did sell a bunch of my Apple stock maybe a few weeks ago. And now that we're back at 147, and by the way, Apple's a stock that like many, I have holding shares and I have swing shares. So I sold my swing shares. I'm not selling all my Apple shares because I'm not a fool. I know Apple is going to be great in the long term, but I also know that I need to sort of build more capital, because if you don't build more capital, you're just stuck here waiting, right? So people talk about you can't time the market. I completely agree, you can't time the market. But if you play trends, you can make your money go a little further. Okay, so Apple has a support zone around 147.9, 148. And you see here, we've been fighting that recently. Although pre-market is sort of looking to be like a little below, or actually, no, it's not. It's actually on the level. I'm expecting Apple to come back down to 140 at a minimum. So if it comes to like 140, this is where my buy order is set. I have my buy order set a little higher than this. And the reason for that is typically institutions have a lot of unfilled orders at these support zones. And when they approach these support zones, other people have sort of padded those support zones with buy orders. And I want to make sure mine get filled, because if mine get filled, I made a ton of profit swinging those swing shares, right? So I'll be buying my first batch here, and I'll be buying my next batch probably around where the EMA 800 crosses. So like a little higher than that. So if it comes down sooner, maybe 130. It could be a little higher depending, right? But long term, Apple's fantastic. Apple's one of those stocks I tell people you can literally buy it, set it, forget it, don't worry about it, and it'll do great for you for the long term. At least this is my opinion, right? Once again, my opinion, not a financial advisor. I can't tell you what stocks to buy, sell. I can't tell you what to do. Like I said, this is what I'm doing, right? But just going back to all of this, the reason I keep buying and selling stuff is I want to keep making money. I need to churn profit. That allows me to have more shares of Apple. So by selling Apple for 180 back in end of 2021 or 175 or whatever, then selling it on some of these peaks, right? And like I said, this is sort of why I have this charted. The reason I have it charted is that it allows me to understand when something is super euphoric and like when I can start, dumping, right? So I typically don't like to hold my swing shares in when we pass euphoria, because it's just not worth it, right? Like I said, sometimes it just keeps going. Like Enphase is one example. If I sold all of my shares and not just my swing shares, before on one of the pumps, I would not have been there for most of the move. So that's sort of like where it gets important. End phase is one where I sold like a lot more shares. I sold shares out of my hold shares too because it was so euphoric. But yeah, I expect Apple to come down to around the 140 mark, potentially even more, right? If it comes down even more, it depends. It depends on how many orders are sitting here. If we are able to sort of bypass that and move much further down, or if we don't fill all the orders and we sort of counteract that with buying pressure and it bounces up. The idea here is stocks will come down like this, like right here, either go up or either go down, right? It goes up if there were more buy orders than sell orders at this point, right? Like people were buying here more than they were selling. It went up. People were selling more than they were buying here, then it goes down, right? But long term, I think Apple is fantastic. Energy transfer, but yes, must take profit. Yeah, 100%. I'm glad to hear you say that. Always take profit. Before I go into some of the speculation stocks, maybe we'll talk about Disney. Disney's another stock that, once I hit like 110-ish, I started selling again. I don't know where my line went. It was around here, but I'll plot it after. But basically, this is another stock where we have seen some very recent lows, right? So Disney, I think, was like 200 or 300 at some point. There it goes. It was 200. It's $200 once again at the high point back in March of 2021. It's been slipping and sliding ever since. But pre-pandemic or the first week of the pandemic, we saw lows of like $80. And we haven't seen those lows since recently again, right? We're starting to see them below. You see the green bars, all these the green lines. These are pretty much outside of the normal trading range for Disney, at least in the last few years. But we're seeing them more and more. So this is sort of where I like loading up on Disney. Disney is a company with tons of assets, right? They got like they have like the Disney World. They have they now have all the Star Wars movies, so they have a lot of intellectual property. And I think this is a company long term that will do fantastic. Disney Plus subscribers add a significant component to the business too, especially with Netflix. I logged into Netflix actually the other day, and it asked me to set a home base or it wouldn't let me use the service. And I remember they were talking about it, right? Because of the password sharing. I really can't believe they went through with it. And unsurprisingly, Netflix as a stock has sort of been falling since that change. But hey, Netflix's loss can be Disney's gain with people moving to Disney Plus because you can still share. I'm using my sister's Disney Plus right now, and she lives in the UK. So for me, that's the sort of service I want. Flexibility, and also like when I'm traveling, even if I had the service, like let's say I'm a Netflix subscriber. When I go to Copenhagen, I won't be able to use it because I'm not at my home base because you got a set period of time. Well, what if I go for 2 weeks? Then what? I pay for the service and I can't use it because of your new policy. It just doesn't make sense, right? Like they should do what Disney Plus does, which is you can't use it more than once or twice at a time. Disney Plus, if I use it, my sister gets logged out, right? So that's sort of a way to get around it where you can't just get an account and share with everyone. You know what I mean? But like I said, over here for Disney, Disney's a stock. You can't go wrong buying at 100. And that's sort of my plan today is buying it around the 100 mark. And then I'll keep buying more as it goes down. As we go down levels for this stock, I'll keep adding to my portfolio. I still have some Disney shares. I sold a bunch of them over the last few weeks. But the idea, once again, is keep building out as you go down these levels. And the way I recommend this is if you would stop if you would stop buying, like let's say Disney went to $84 and you bought here at 95, bought here at 90, but you're like, you know what, $84, I'm done buying, the stock's gonna keep going down, then you're buying too early. Ask yourself this ahead of time. If you would stop buying at 84, stop buying at like $70, then you're buying way too early. Wait a level. Don't buy here then. Then if that was the case for me, I would not buy here. Maybe I wouldn't buy here either if I was going to stop buying prematurely. Then I can make sure that I can get the best moves. Because remember, there are tons of great companies out there, tons of great stocks to invest in. You don't need to invest in every stock, and you don't need to have FOMO, because if anything else, I'm sure you've experienced the opposite, which is once you get in the stock, it feels like it's not moving. But when you're not in the stock, you're like, oh my God, it might leave without me, right? But yeah, so that's sort of my plan for Disney. Um, Disney does really well at the latter end of the NBA season with their ESPN TV revenue. That's actually a really good point. Q2 and Q3. I didn't even think about that. I forgot ESPN TV is part of it too. But that's sweet. Once again, Disney's another stock. I have like what I call the coma test in DeFi Kingdoms, really talking about my account and like, let's say I got into a car accident and I ended up in a coma. Would the stocks that I have in this portfolio, would they be okay? Like, am I okay with waking up in 5, 10 years and looking at my portfolio? If the answer is no, those stocks have to make a small portion of my portfolio. This is really what those trading stocks, those speculative companies would do. Something like Disney, something like Apple, I'm okay holding until I die. Those are companies that I think will keep going up or keep producing value until I die. Companies like Zomedica and Nano Dimensions, they're seasonal, they're around a lot of catalysts. Yes, they may be a little more long term in nature than other speculative stocks, but they typically have a huge run up, a huge spike when they do run up and then sell off. We typically see this happen maybe 3, 4 years at a time. Now, Zomedica, and I will talk about that next actually because of this. Zomedica is a stock that I hope you guys listen to me. And when I say listen, I hope you guys followed what I did, because remember, I didn't tell you guys to do anything. Um, we broke 20 cents, and there were fears of delisting back then. I think this is like December, right? We went all the way down to 15 cents. People would tell me, people who would ask me if it was too late to buy Zomedica up here were then telling me that they didn't want to buy Zomedica with me over here because they said, oh my God, the stock is too cheap. Now, make that make sense, right? Like when the stock is rallying, people want to get in because it makes them feel good, right? Green is good. You feel like the rally won't stop. And when the opposite's happening, when the stock's selling off, you feel like the sell-off won't stop. You don't want to be part of that stock. You don't want to be part of it. By reverse engineering your emotions, and this is sort of why you have to take the emotions outside of it, you get the best deals by buying when no one else wants to. Because if you should be buying a stock not because it's going up or down, but because you believe in it fundamentally long term, or you believe in a future catalyst that you want to trade it for, right? Zomedica is a stock that I was buying on every single one of these levels. People used to ask me, "Hey, how come you keep buying?" Well, I keep buying because I know where the support zones are for Zomedica. And then, for example, this is a big gap up that we had, right? So I called it over here when Zomedica was 33 cents, and I said, "Hey," so I forget what company came out, but they said, "Hey, $6 price target," which I thought was absolutely ludicrous in this environment, especially with the 1 billion or so shares that we have. And for a reminder, so Medica is a pet healthcare company. Its main focus is on Truforma, which is a pet diagnostic system that really reduces the amount of time it takes for some key diagnostic tests and allows the clinics to do it and make a ton of money because it's much cheaper. So they end up saving money for the consumer. They end up saving money for the vets who can now charge this as a service. They also have PulseVet, which is used for horses. I forget what they call it. I think it's equestrian or I forget, or equine. It's equine. That's right. But main point of this is price action, right? Look over here, 33, 34 cents. I had sold around here, 28, 29 cents, a little around 30 cents. And I said, I'd expected the stock to come back down, and I expected it to come back down to 20 cents. Why is that? Because there's a gap that has to be filled here. What happened was from this market close to this open, it just rocketed up and never filled the gap. Now, do stocks always have to fill the gap? No, but more likely than not, they will. And we know that Zomedica has too many bag holders for it to just keep rocketing up. The plan here is we're going to start seeing this come down long term. just because the environment hasn't gotten better. So Medica is one of those stocks, a speculative stock. They're not profitable yet. So like, why would people rotate their money into a company like Zomedica versus rotate their money into a company like Apple, right? This is sort of what my expectation is, at least early on. Um, what's really interesting here is you get the same old people. No, I'm not selling any Zomedica here because I think it's going to keep going up. But then those same people won't buy. So, hey, like I said, I'm not a financial advisor, so I can't tell anyone what to do, but I just keep showing and showing and showing, and sort of, you guys can watch. Like, I make those Zomedica videos weeks ago, and I said, I'm selling here, I've already sold, the stock's gonna go down, get pushback. And you know what? I don't want the stock to go down. Don't get me wrong. I hold 10,000 shares of like Zomedica for holding shares, right? But the swing shares I keep selling, and I would love for Zomedica to go up, but I'm also realistic, right? Until the macro environment changes, we won't see it. We won't see that big jump. Until we see something significant with the company, we won't see this huge jump. So in these periods, I keep trading these ranges every single time. As the Zomedica comes down, my buy point is here at 23 cents. My next buy point here is at 21 cents, then 19, then 15.8. And then as we go up, I will sell those shares back. This is sort of how I've actually turned my negative position. So sometime last year, I was negative on Zomedica overall. I'm now positive. And the reason for that is all of the swing trading I've been doing. So I'm on house money now with Zomedica. So I'm happy. And sorry, house money is not the right term because my 10,000 shares aren't free, like technically, because I still have an average cost, but the average cost is like 12 cents. 12, 13 cents. So it's perfect for me because, like I said, every time I make money, I reduce that profit. I take that away from my holding shares, so my average costs come down. So yeah, it's pretty good. So Medica is interesting. I traded PetMed during the post-COVID boom, but I will certainly take a closer look at it. That's awesome. My advice here is I would not be investing, especially if you're new to Zomedica, maybe wait till 20 cents. I keep trading it. So like I keep buying at different levels and I keep selling it. I think Zomedica is a stock that we're going to see trading within this range for a long period of time. Once stocks rally or the stocks bottom out, this won't be the first stock to rally, right? Like the first stocks to rally are the big ones, the big blue chips. Those are the stocks that now's the opportunity to sort of grab. Hey, Andrew, yo, flying visit, dude. Hope all is well. We'll catch up on the video later as working. That's awesome. Hope you were leveling up your heroes this morning, Andrew. Which reminds me, I'm flying to Copenhagen in 2 days. So on Sunday, I fly to Copenhagen for a week, which means that this next stock live stream will be canceled for the week after. But I'll be there in the Discord if people want. And also the DeFi Kingdoms live stream will also be canceled, which I had mentioned during the DeFi Kingdoms live stream on Wednesday. So that's sort of Zomedica, and you sort of see my plan here. Now let's look at one of my favorite stocks to trade in this period. This is the stock that's made me the most amount of money, and it's the stock that I'm going to take a huge bet on in the coming weeks. So Mara, or Digital Marathon Holdings, or I guess it's Marathon Digital Holdings, whatever, is a stock that mines Bitcoin. It's a stock that mines and holds onto Bitcoin in the balance sheet. So typically we will see Mara reflect the jumps in Bitcoin, but it's almost like a leveraged version of Bitcoin. So like when Bitcoin goes up like 5%, Mara's up like 15%, right? And we saw it at, I think it was pandemic highs. Mara is up as high as $80 at some point. Yeah, $83. And it's had some wild jumps, right? So $83 in November 21, corresponding to the peak of the Bitcoin euphoria. And as you know, Bitcoin cycles, come and go, and we're starting to see Bitcoin rally, right? So like I was able to pick up some Bitcoin or some Mara on my trip to Madrid. I remember being on a plane and texting Andrew, who are literally like, was in the chat just now, on, hey man, I'm flying. I got the Wi-Fi on the airplane because we fly first class Air Canada, and I was like, man, I bought some Mara at like $5.20, and I like tripled my money. I tripled my money within a few months. It was absolutely absurd. And then it came back down, and it went to $5. I bought some. It went to $3. I bought some. Right, like you can see here, it just test aligned so perfectly. And then as we went up, I was selling them back. So I bought some Mara again at $7. I'm gonna buy some Mara at $5, and if it hits $3, I'm putting 15 to 20,000 US into Mara because I truly believe in Bitcoin. And for me, I'd rather put this money into Mara than into Bitcoin because when Bitcoin rallies, Bitcoin is not going to double in a short period of time, the same way Mara will triple, quadruple off a 20% jump in Bitcoin. And that's sort of what I want to do. I think that Mara is probably the biggest opportunity in the stock market right now. One of my colleagues at work, his daughter is doing a stock challenge, and Mara was like $4 when I said, hey, if she's looking for a stock to put into her portfolio in this time, especially because apparently you can't short in these like high school projects, buy Mara. And like she's up like 75%, which is pretty sick, right? So Mara, fantastic stock. I think that this is one that like will continue to sort of, you know, I think it'll go down if Bitcoin goes down, but then it'll skyrocket as Bitcoin goes up. This is a stock that I really, really want to hold on to. This is a stock that I cannot wait for the next Bitcoin cycle. Like I said, I'm trading most of it. I will hold a tiny bit. Maybe I'll hold like 500 shares, but I plan on trading like thousands and thousands of these shares because it, like I said, it has been my biggest winner in 2022 and 2023. Mara and Riot. Yeah, I forgot about Riot. How is Riot doing, actually? I used to trade Riot too. Riot was like the kid Mara, right? Let's see. Let's go check that out. Why is it not loading? Riot. Here we go. All right. Yeah, so it sort of is like mirroring exactly what Mara was doing, which is pretty sweet. Let's see over here. What was Riot's high point? $80. Yeah, absolutely absurd. I think something happened though here because Mara peaked here. It had a way higher peak in November of 21. I think Riot either announced a share offering or something at the time because the moves on Mara are way bigger. But like if you want sort of like to spread your seeds across the industry, and the reason I say that, right, and the reason Trade Room is doing it, I'm assuming, is to diversify the risk. If something happens to Mara, like let's say they get shut down or they have a huge problem with the warehouses, you get completely destroyed in the stock price temporarily. And it doesn't matter how well Bitcoin is doing. Like let's say their thing explodes or something, right? That's sort of why you want to like have like number one and number two in this space. But I used to always sort of review and look at like see every like update, like Mara would say, or digital Marathon Digital Holdings, or Riot would say, here's how many miners we bought, how many miners we're loading up, and when they should be ready. Here's the hash rate and everything, which gives you an understanding of how much Bitcoin, or in this, I think Riot does Ethereum too, I can't remember, that they're able to mine over a period of time, right? And the idea is you build a sort of factory that does this, and you keep it on the balance sheet. So when Bitcoin goes up, boom, you make a ton of cash. And that's sort of why Mara and Riot, like they definitely like follow the price of Bitcoin, but like I said, they're like a leveraged version of Bitcoin. The next stock is ChargePoint. ChargePoint is my old faithful stock. It's a stock that literally I used to trade from, like every time I hit $20, I would buy it. They would go to 30, I would sell it. And that's sort of what I did in 2021. So if you go back here, man, it doesn't look as good. Where is it? Or maybe with 21, I did that the whole time. Yeah. You can see here, $19, 30, $19, 30, $19, 28, $19, 37, $20, 27. Stop being able to do it here, but like, these are phenomenal trades, right? ChargePoint is the leader in EV charging solutions, right? So for me, I like to bet on the winners. I like to bet on Tesla for EVs. charge point for EV charging. I know that Tesla has their own charging stations, and there's all this talk about charging infrastructures and everything in the US, right? But when you look at charge point over here, since it broke 20, so look over here, it's sort of been like trading below for the most part. Like, yeah, there's been some periods of time where 20 is a high point, but you can see here a couple times it came down to like $8, 807. And now we're trading in a new range for charge point. So we've had to adapt. Like charge point right now is sitting at $11. So I bought some. I bought some once it hit 11. And I bought some when it hit 12 as well. So I trade levels. I sold charge point at 13 something earlier last week. I bought it back at 12 the next day. And then I bought some more at 11. And I plan on buying some when it hits 9. So that's sort of my next buy zone. I'm waiting for charge point to come back down. If it hits 9, I'm buying more. If it hits 8, I'm buying more. And this is sort of why I split my buys. I don't need to buy 100% of my position when we see the first sign of weakness. I scale into my position like this. So I scale in, smaller buys at the higher prices, and then bigger buys at the smaller prices, and then I scale out as we go up. So like to give you an example, maybe I buy 200 shares at $9. Maybe I buy 500 shares at $8. Then I sell those 500 shares at $9 because now if it goes down, I can buy those shares again. If it goes up, I sell the shares I bought at this level. And this is my tried and true method for continuously making money in the stock market. When people go, how did you make money? The stock is traded like up and down, up and down, up and down. Well, because I trade the levels, I don't sit there and get greedy. If I sat here and chart point was $500 and it went to $9 and came back down, I made $0. However, when it goes up, I sell. And if it goes up more, I sell what I bought at this level, and I keep doing it. And if it comes down, the only time I'm not happy by doing this method is when it trades flat because I don't have anything to do. But this way, when the stock goes down, I'm happy. When the stock goes up, I'm happy. Cash out, cash in, cash out, cash in. It's phenomenal. And this is sort of how I trade the stock market. And the reason I can do this is I'm holding those shares, which are hold shares and swing shares. And I do that with my swing shares. I have a select portion of shares in these companies that I continue to grow. And every time I make profit, I put that profit into those hold shares long term for the company at the lower prices. But to generate money, because honestly, I don't want to just sit here and buy a small amount and wait for like the next couple of years for the stock market to recover. And mark my words, the stock market won't just sorry, I shouldn't say that word. My apologies. The stock market just won't skyrocket because, in my opinion, it's a slow trickle up over time. So we're not in any rush, and I love making money on each of those levels, right? Another stock I'll cover here is Bionanogenomics. Bionanogenomics is another company, phenomenal. They've had some really good news around their machine that detects structural variations, the Sapphire and Sapphire 2, and sort of like other offerings. But you can see here in August 22, they reached $4. They reached 275 and $3, late November. And like we've sort of seen peaks, but like this is a company that was like $10, $11 at the high point back in 21 from like 50 cents. Huge, 16 bucks at the high point, but it went from like 50 cents all the way to like $16 in a few months, right? Over some amazing hype. Now, what's happening now is I'm starting to rebuy my shares. I sold them all in the $10 range. I bought them at $6, sold them a little higher than that, bought them at $1, sold them when it hit $3.50. And now I've been buying again at $1.50, right? Or $1.40. So like you can see here, my sort of plan with Bionanogenomics is it hit this point, 136, bought it again. If it keeps going down, if it goes to 96 cents or like maybe $1, I'll buy it again. About 5,000 shares here. So like if it goes up, I'm going to sell it. Like once we go up to like $2, I'm selling it again. That's sort of where I'm hoping. I'm hoping it goes like this, $2. I make like 60 cents on every share, right? $3,000 profit if I do it. Why not, right? So that's sort of my plan here. I buy it here on sort of like this floor. It jumps up. I sell it, rinse and repeat. And that's sort of my plan. So like I won't be buying any more BNGO or Bionanogenomics unless it comes to this zone at 96 cents. Really, really hard to do that. I don't think it will. But hey, like I said, there's no rush and there's so many other stocks that we can buy. Tesla is another stock. I hope you guys are buying Tesla. I was buying Tesla all of December. While Elon Musk was selling to sort of raise money for Twitter, people thought I was stupid. People made it very clear that I must like burning money. There was somebody at work who used to come up to me all the time, every day, and ask me how my Tesla shares were doing, knowing full well that Tesla was down. And I think that was kind of rude, but whatever. Now it's kind of like, well, how do you like me now? Because, it went from Tesla's a stock that I've always been taking profits on near the high points. I won't lie. I started buying Tesla again, like 200 something, and just I watched it go straight down to 110. Or I didn't even get it at 100, 110. And all the way down, while it was going down, kept buying, kept buying, kept buying. And as it was going up, keep selling, keep selling, keep selling. With most recently selling it over here at 182, and then I sold some at like 210. Tesla is like 196, and I'm hoping it keeps coming down. I'm hoping for it to break 177 or hit 177. I buy some here. I'll buy some 144. I'll buy some at 128. And once again, you see my method, my madness. This is a company I believe in long term. This is a company that is a complete innovator in EV technology. They're going to have insurance, ride sharing, robotics, autonomous driving. Huge, huge potential, huge profitable company that has tons of cash. This is the company that you want to invest in. This is the kind of company that I want to invest in over this period of time. And maybe I'll cover one more stock. So Enphase. Enphase is another stock. I don't have the lines drawn on here because I wasn't planning on showing it today, but Trade Room did bring it up, so I want to talk about it. This is another company that's done phenomenally. Like during the pandemic, we saw it sort of have a meteoric rise, right? It rose all the way from like $7 in 2018 all the way to like $60 in 2020 to like somewhere around 280 bucks in 2021, and it's had some peaks around 300. Now intermittently it's had scares, right? Like they had a big earnings scare and earnings guidance scare here, which brought it to 113. Huge drop. It dropped over 50% over that course of that time. But once again, it rallied, and you can see here the EMA 800 is sort of like a trending forward line. So I've been buying it again around 220, sold off here in 300s, and I'm hoping it keeps going down, allowing me to pad my position, and then hopefully it keeps going up and I can take profits. If it keeps going down, I have my zones on another chart to sort of buy. And I think the most important takeaway I have here is no matter what you do, make sure you have a plan, because you don't want to let those green and red lines influence your decisions, right? I think that's the most important thing. And let's look at crypto for a second. Maybe I should refresh this to see what's going on, but crypto is somewhat healthy. Bitcoin is sort of held the 24,000 range, which is awesome. Can be expected, we've seen Cardano and XRP really trade flat. Honestly, there's nothing much to say here. For me, my biggest bets on this are Ethereum, Bitcoin, which I do mainly in Mara, as I just showed you. I have a bunch of XRP and Cardano. That's really because I do believe Cardano will get back to $3 and surpass it. I believe XRP will go to $1 at least. So this is an easy 2x for me at a minimum. I buy into Solana because I bought into the ecosystem. So I have some shredded apes. I want to get into God's NFT as well. And there's another project that I can't talk about yet, but I think I think it'll be good in Solana as well. $24 for Solana is not bad. We did see go to $9 with all those issues with FTX because they were really propping up the price of Solana, but the community is pretty sick. They have really good NFTs and they add value. Like I bought a Solana NFT, which was like a sneaker thing. So like when I run now, I earn crypto and I can trade that for USDC. So I've been doing that too. But Solana is another one that I'm invested in. I'm not buying into Shiba Inu or Polkadot. I have bought into Polygon. I bought into Polygon around like 60 cents. It's actually done pretty well since that. It was like 60 cents, like maybe, how do I do this? If I go back. 90 days. I believe it was like, yeah, there you go. It was like 76 cents, 180 days maybe. Yeah. So like I bought in around here, which is pretty sick. Um, which is pretty good. There was better points to buy at like 40 cents in the summer. I missed that. But 65, I think 70 cents is where my average cost is. Obviously, Avalanche. I think Avalanche is super bullish. Um, not only is DeFi Kingdoms on there, but they got a super sick ecosystem. This is one that was over $100 at one point. My average cost is like $17, so pretty much the same as this, but I think this is a worthwhile bet. Uh, and I also have Cosmos. This is one I have. I have over like 300 Cosmos across multiple accounts. The reason I like Cosmos, or in this case Atom, is they have tons of chains. They don't use bridging. So like bridging is one of the biggest risks in crypto because if the bridge gets hacked, you can't redeem your assets and swap them back to the chain that you got them from, which makes it a big problem. This has like interoperability. And on top of that, they have the most airdrops of any chain I've seen. So like every so often a new project launches, and because I stake Atom, they send me a ton of airdrops. I will convert those airdrops, whether it's an Atom derivative or a Juno derivative or an Osmos derivative, into more Atom. And that's sort of what I do because I believe in Atom the most out of any of those other chains. All the other chains are super hyperinflationary. I want Atom. This is the one that I choose to hold on to long term. So I've got like 300 something of that. And I'm super bullish on it. Anyways, that's pretty much it for today's video. I hope you guys enjoyed it. Get the likes up. If you're watching this after the fact, make sure you hit the like button. Comment below on what stocks you want covered because maybe if you're not able to make it to the live stream, I'm able to sort of cover it in the next time we do it. And as a reminder, I will not be here next week. I'm flying to Copenhagen on Sunday. I'll be gone for about a week, so all live streams are canceled. But I'll be back the week after with more of the same. And how's it going? Kind of sus PTG DeFi Kingdoms. Let's go. As you can see here, I got my DeFi Kingdoms mug. But this live stream is usually 45 minutes because I got 8 minutes to get ready for my first call at work. So I hope you guys have an awesome day. I hope the stocks do rally. You saw sort of what my strategy is. I'm a long-term bull, but I like making money, so I keep trading those ranges that I showed you. And that's sort of how I consistently make money in the stock market. Anyways, have a great Friday and an awesome weekend. Thank you. Thanks, Jake. Have a good one. Bye.